and we are talking to managements now on the quarterly results, and the focus is on Muthoot Microfin. We are with Sadaf Saeed, is the CEO of Muthoot Microfin. Sadaf, hi, good morning and welcome to the show. Let's talk about the AUM first. That has grown nearly 18%, but disbursements have declined sequentially. Was this seasonal, or are you consciously sacrificing growth for portfolio quality?
Good morning, Kavita. Thank you for having me here. So, as you rightly said, the AUM has increased, but if you look at year-on-year number, disbursement have also increased. So, year-on-year AUM has increased around 18%, and disbursement usually in microfinance business in first quarter are low. But if you compare to our previous year's first quarter, it's a 50% jump on the disbursement. So last year we disbursed around 1,775 crore. This year we have disbursed 2,644 crore. So it's a significant jump. And it's a good momentum that we have carried in the first quarter of the financial year. And we are seeing a positive trend in terms of demand as well as the asset quality. The asset quality has significantly improved. We have seen collection improve. Our overall collection is around 98% and 97.97 to be precise. And our X-bucket collection is 99.9. And as a result, our GNPAs have also reduced by 19 basis points. And that gives us a lot of confidence to go into the financial year and disperse more. And that's why we have changed our guidance also from earlier 15% AUM growth to now 20% AUM growth. And of course, as a result, our profits will also improve, and we are looking at a revised ROA of around 3.3%. So the quarter has been really good for us.
Hi, Sadaf. This is Nupur joining in now. How much further downside do you really see in borrowing costs given the changing interest rate cycle, and how much transmission into NIM should investors expect over the next 2 to 3 quarters?
Thanks, Nupur. I think this is a very, very important question in terms of our cost of fund. It is coming down consistently. It has come down from 11.02% to around 10.13%. And if you look at quarter on quarter, also it's a 14 basis point reduction from 10.27% to 10.13%. Our incremental cost of fund is around 9.8%. It has also come down around 10 basis point between the 2 quarters. I think in the coming financial year or in the current financial year, we should be in the single digit in terms of cost of fund, which will definitely help us expand our NIM. We are currently at 12% net interest margin. By the end of the year, we are likely to be around 12.5% net interest margin. Quarter on quarter, there is an improvement. If you look at for the full financial year, last year we were at 11.9% NIM. We are at around 12% NIM. So there is a 10 basis point already improvement. If you look at year on year, we were at 11.5% NIM. We are at 12%. So that's a 50 bips improvement. Definitely in the coming quarters, we will improve our net interest margin. Our cost of fund is coming down. We are in a favorable situation because there is a good amount of liquidity. We are carrying around 5,000 crore worth of sanction in hand. We have 1,300 crores of liquidity on the balance sheet, and we have a huge demand in terms of loans. So definitely we will be able to grow well. And at the same time, the ability to negotiate with the lenders is also better. So our cost of fund is consistently coming down. In the quarter beginning, we had a rating upgrade. Our rating has been upgraded to AA minus. So definitely that will help us to negotiate better and get better cost of funds. So I think definitely there's a 25 to 30 bips reduction possibility in our cost of fund.
All right. PPOP has remained strong despite elevated operating investments. What is the medium-term cost-to-income target here?
So right now we are at around 53% cost to income. Our long-term goal is around 45%, but I think in the medium term we will be sub 50 by end of financial year. So we will be around 49% cost to income. And it is driven by both increase in disbursement, more operating efficiency. If you look at our branch, Our AUM per branch was 7 crores at the beginning of the last financial year, but in the current financial year, we have already reached at 8.6 crores. So that is really helping us to improve operating efficiency, and our operating cost is coming down. It has come down from the last year 6.4 to 6.3%. We anticipate that this will further go down. So definitely, this will help us to improve our cost to income ratio, and we'll be sub 50 by the end of the financial year.
Right. So, how sustainable really is the current ROA trajectory of above 2%? And what would be the normalized ROA once the portfolio mix changes?
So we are actually guiding towards 3.3% of ROA, and we feel that we can consistently deliver around 3.5 to 4% ROA in the coming year. For FY30, we have guided 5% ROA, and our effort is to move towards that direction. And the strategy that we have laid out at the beginning of the financial year, which is getting executed now. So we have diversified our portfolio. Earlier, we were entirely JLG loans. So now our mix is around 76% JLG and 24% non-JLG loans. And the portfolio that we have generated in the last quarter in terms of individual loan over the last 18 months, actually, it's really performing well. We have 3,200 crores of AUM in individual loan. There is a 30 plus of 0.02%. There is no 60 plus at all. And that portfolio is really performing well. That is also helping us to digitize our collection. 40% of our overall collection is digital now. And simultaneously, we have also started gold loan business. So we have disbursed around 350 crores in gold. For the first quarter, it was around a lesser amount because we just started, but now we are had a run rate of 100 crores per month that we are disbursing, and both the assets put together are contributing well in terms of our expansion of AUM as also improving in profitability. So definitely, we will continue to grow and we will contribute to the AUM as well as to ROA.
Non-JLG products are growing rapidly. What share of incremental disbursements do you expect to come from MSME, gold loan and LAP over the next 2 years?
Yeah, so our target is to be at around 70 and 30 kind of a mix, where 70% would be JLG and 30% would be non-JLG. We had initially target around 75-25. We are already at 76-24. So by end of the year, we are definitely gonna overachieve our earlier target. So our disbursement mix incrementally would be more towards gold and individual loan. Definitely, our JLG business will continue to sustain. So right now, the disbursements are 50-50. So 1,000 crore disbursement in a month, 500 crore is going to JLG, and around 500 crore is going to individual and gold put together. And that trend will continue definitely as we accumulate. But because the base of the non-JLG is smaller, the percentage growth there would be much larger.
All right. Now, could diversification actually dilute margins, or will lower credit costs more than offset the yield moderation?
Yeah, that's a very good question. I think, Nupur, the products that we have chosen are very carefully identified. So we have studied the pattern in which the customer kind of borrows, and we have done a study of propensity to take next loan. And we have seen that the first loan that the customer takes after microfinance loan is a gold loan, and then subsequently a business loan, secured or unsecured. And all of these products we are offering. So our idea is to maximize the wallet share of the customer. So overall yield per household will remain intact. Our yields are also expanding. In the current quarter, it was slightly flat, but in the coming quarters, it's definitely gonna expand. Our overall yield on the lending is blended rate, if you look at, is 23.5%. So that will continue. And definitely with more retention of the customer, I think we will be able to bring more operating efficiencies because the cost of new customer acquisition is slightly higher, and also credit cost is also higher. So it helps us to retain our customer with multiple products in terms of building and operating efficiency and also reducing credit costs. So you are right in a sense that these two parts will definitely offset any sort of compromise on the yield, while our yield is anyway improving.
All right. With that, thank you so much, Sadaf, for being on the show and answering all the questions for us. Thank you.